Ladies and gentlemen, good day and welcome to DLF Limited's Q3 FY26 earnings conference call. We have with us today on the call Mr. Ashok Tyagi, Managing Director, DLF Limited, Mr. Sriram Khattar, Vice Chairman and Managing Director, Rental Business, Mr. Akash Ohri, Managing Director and Chief Business Officer, and Mr. Badal Bagri, Group CFO, DLF Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Participants connected on the webcast are requested to refresh their tab in case they face any issue. I now hand the conference over to Mr. Badal Bagri. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us today. We will begin with our overview of operational and financial performance. We are pleased to report a strong performance in third quarter of this fiscal, with robust operating execution, strong cash flows, and a significantly strengthened balance sheet. Our performance this quarter reinforces the resilience and quality of our business model. We are extremely pleased to report that we witnessed record gross collections of around 5,100 crores, with sustained collection efficiency across all our projects. We believe this is one of the most critical and leading indicator of the underlying strength and quality of our sales. Net collections during the 9-month period were 10,216 crores, reflecting a year-over-year growth of 21%. Supported by these strong collections, our net surplus cash generation for the 9-month period was 6,432 crores, exceeding the entire cash generated in the last fiscal. The performance highlights a disciplined focus on cash flows as a core metric of value creation. As a direct outcome of this strong cash generation, we have achieved our goal of zero gross debt in the development business ahead of our estimated timelines. Our balance sheet remains extremely robust, with gross cash of approximately 11,600 crores, of which the RERA balance would be 10,400 crores. Recognizing the sustained improvement in our business, ICRA upgraded our credit rating to AA+ with a stable outlook, following CRISIL's upgrade in the previous quarter. New sales booking in the current quarter was 419 crores. Few things we would like to highlight around this are, as previously indicated, bookings at Dahlias were paused during Q3 as a part of planned redesign to enhance customer experience. The bookings have now resumed. While there were no new launches, it is noteworthy that we were able to monetize almost 1/4 of our inventory, excluding Dahlias, within this quarter. New launches continue to be aligned with our medium-term growth plans, and we remain confident of achieving our stated sales trajectory across the medium term. Few financial highlights of the quarter. Our consolidated revenue stood at 2,479 crores, a growth of 43% year-over-year. EBITDA stood at 848 crores, a year-over-year growth of 39%. Profit after tax before exceptional items at 1,252 crores, reflecting a growth of 29% year-over-year. Reported profit after tax of 1,207 crores, a 14% growth year-over-year. Now I'll hand over to Sriram to give the highlights of our annuity business.
Good evening. The annuity business continued to perform well. The take-up from the GCCs and international companies, especially in the BFSI and technology sectors, was fairly strong. Our closing vacancy as of 31st December is now in DCCDL, where about 88-90% of the rental assets are, is now down to about 5%, 5.5%. However, in terms of value, now it is further down to about 3.5%. The income was fairly robust. The downtown 4 in Gurgaon is fully leased. Downtown 3 in Chennai is fully leased. And I am further pleased to share that downtown phase 2, if you may recall, we have 4 towers. The biggest tower is Tower 7, which is 2.2 million out of 5.5 million total offices. We have been able to lease the entire tower already. In Atrium Place, we've been able to lease 1, 2, 3, and 4, all the towers completely. We received the OCs for Tower 1, 2, and 3. The tenant fit-outs are making very good progress, and the rent commencement have started for 1 or 2 tenants in the last quarter, but will now pick up pace. The construction of Tower 4, which is leased to one single GCC, has slowed down marginally because of the GRAP situation here. There we expect a delay of about 45 days to 60 days in its completion, but we expect the completion to be in July, August of this year. Maybe it goes to August and September beginning. In downtown Chennai, we have the construction on the 4th and 5th tower are going full speed. We have re-engaged with the international architects and redone the promenade, which is in the center of these 5 buildings. And I dare say it's come out to be extremely nice and good. In this also, we in Tower 4 and 5, which is 3.5 million, we have already leased 450,000 square feet, and negotiations are on for further leasing in downtown here and downtown there. Therefore, as we stand today, our stock in our existing buildings is quite low. It's now down to about 1.5% and therefore the leasing in the next year will be restricted to either the midterm expiries that happen, the 9-year renewals, and the new build-out that is taking place. In retail, the consumption in the last quarter was much better than the consumption in the corresponding quarter in the previous calendar year. We have met our budgets in terms of our NOI and in terms of our other activity. The occupancy continues to be 97-98%. The 3 new malls, which are all in the books of DLF, 2 of them, Midtown Plaza and Summit Plaza, are now 95%, 96% leased. Fit-outs are going on, and within the next 3 months, we should open both these malls. Promenade Goa, the leasing has commenced, and I'm saying it with some cautious optimism that the initial response has been very heartening, and we have the first mover advantage there. We have the advantage of creating the best mall in that entire region, and we are reasonably confident that we'll make a big success of it. The construction on Mall of India Gurgaon is progressing along with the other towers and offices, and there is good progress being made there. In Noida, data center 2, as we call it, which is the 3rd building, we have the rent commencement of that also in this quarter, and construction on data center 3 is going on in full swing. We continue to create a lead in the area of ESG and in sustainability and fire safety. We became the world leaders again by the Swords of Honor received from the British Safety Council. We have also got platinum rating for Wyatt score for a number of our buildings, and now we are the largest portfolio in the world.
Okay, we can take the questions now.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Participants connected on webcast may click on Ask a Question tab available on your screen. Participants connected through audio call may please press star and 1 on their phone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We'll take our first question from Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much for the opportunity. My first question is actually on your collections, which has notably gone up this quarter. Is that a sustainable run rate one should think of from quarterly perspective, or has there been some, previous quarters dues which have got accumulated in this quarter as well?
Okay, Puneet, I think from a development business perspective, it will be best way to look at the collection will be on annual basis rather than quarter-on-quarter basis. As you would know that most of our sales is construction linked, and the amounts become due as and when the construction phases or the milestones are achieved. So I would say instead of looking at quarter to quarter, this will always be misleading. We had no significant dues of the previous quarter which has got taken up in this quarter. As mentioned earlier in our presentation as well, that our collection efficiency across all projects remain extremely high. So the way I would look at collections is we should look at a 10 to 15% growth year over year versus what we have achieved last year on an overall basis from a collections point of view.
Okay, so 10 to 15% growth this year, full year, and then next year also similar number.
Yeah, indicatively, yes.
Okay. And from construction spend, should that also be largely similar? I understand there is a bit of GARP issue you are facing.
Yeah.
But
So Puneet, I think this quarter was, as you rightly pointed out, we had issues. We had suspension of work for a good 30 to 40 days, 45 days or so. But if you look at the 9-month trajectory, the last 9 months of this year and last 9 months of previous year, our construction spends are almost 40% up, almost 2,400 crores versus 1,500 odd crores which we spent last year. And as we had kind of mentioned earlier, a range of 900 to 1,000 crores is a good number to kind of look at on a quarterly basis. Is a number which possibly you can consider as a reasonable construction spend over the coming quarters.
And Puneet, just to reiterate one more point, that if you now look at the last 3 or 4 years, Q3 always gets impacted by a gap. It could be 30 days, it could be 45 days, but effectively like between 1 to 1.5 months in the entire year does get lost, unfortunately, to this to the entire pollution related gap measures. And I think most of it happens in Q3, unfortunately.
understood. And secondly, if you can elaborate a bit more on, why did you pause the sales in Dahlias, and what is the expectation of the new product into this Q4?
Okay. So here, unfortunately, Akash, while he'll be joining,
He's already there.
He's there. Okay. So Akash, I'll just do the intro and then you can take it off. So normally, Puneet, this quarter would have been a reasonable quarter for us in the usual couple of thousand crores of the non-launch quarter sale. We were doing some design modifications on Dahlias to improve the entire layout and the client experience. And then, as you know, as per RERA, if you do a design modification, you have to run it for the approval of all the existing customers. And I think 75% customers need to sign off. Then RERA needs to take cognizance of it. So unfortunately, about 2 to 2.5 months of this quarter were spent in that entire process. We are very glad that in early January, RERA has given that permission after taking into cognizance all the customer approvals that came in. And now Akash has resumed the sale. Akash, over to you on the Dahlias piece, boss.
And also what design modifications you've done, if some color can be given there.
So Puneet, I'll tell you first, with regard to, it's an enhanced design. Basically, what happens is as the codes change, you can adapt to the new ones, or you can go back and work with the old ones. I think we've demonstrated a tremendous amount of strength in kind of implementing that. Every element of design and structural stability has gone up manifold. Again, I say to you that we could have continued to do what we were doing, but I think we took a call that this is going to be since the project right now is in its inception, we decided that we'll go with the new code, and therefore, whether it was the structural part or whether it was the certain other elements in terms of facade and all, the product has come out beautifully. So I think that is one. It is accepted also by a lot of customers who've endorsed it. As you know, that the process is that you have to take full endorsements from the existing customers, and now we're over 55%, almost 60% sold, and that is before launch. We've got an overwhelming response from our customers, and that's as far as Dahlias is concerned. With regard to your point on collections, I just like to add to what Badal and Mr. Tyagi already said. So our collections, if you have been tracking them, have been consistently doing well for the last over 2 years. And that speaks clearly about the quality of sales done. So as far as this particular quarter is concerned, it is, and there is no overhang, or there is nothing that has added to the previous quarters that we have kind of realized this quarter. This has been primarily a schedule-based collection, and it has been more than 100%. Puneet?
And the design change, will it do anything material to cost of construction for Dahlias?
Yeah, it will do material change to cost of construction, little bit for sure. But also, as you know, Dahlias is a dynamic price point system. It is not linked to, in terms of, it's not linked to volume sales or not linked to any categories. The Dahlias will continue to rise. Just to let you know, from the past year alone, there has already been a 25% increase in Dahlia pricing. So, and we are selling. So, both, yes, to answer your question, that plus, of course, commensurate revenues as well.
Puneet, just to add one more point, our margin for this project will remain intact despite what we are doing. Intact to positive, I would just say, but I would leave it intact for this point of time, at this point of time.
Yeah.
Okay. And lastly, if you can also, elaborate on what your plans for this calendar year in terms of new products or phases that we should watch out for.
Well, this calendar year, we are working on Arbor 2, as you know, the senior living. And we've got our residual business to do. And then, of course, now we are back we've reintroduced Dahlias, and that is before the main final Big Bang launch. So we will try and use this quarter as well for that, and look forward to the senior living launch as we had talked about.
And Puneet,
Okay,
if you are asking for the calendar 26, the calendar 26 will see at least one major group housing launch in DLF City. It will see the next phase of West Park in Mumbai. It will see a launch in Panchkula. It will hopefully see Goa. So, I mean, all of those launches will happen. Calendar most of them in the calendar, maybe something overflows into Q4 next year, but I think most of them should happen this calendar.
So Goa should be now next year, fiscal year, not this whatever potentially.
This is fiscal May 8 weeks, but let's see if 8 weeks we can pull off,
Okay. Okay, great. Thank you so much and all the best.
Thank you. We'll take our next question from Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, am I audible?
Yes, Pritesh, you are.
Yes. Hi. So thanks for taking my question. Just on Dahlia, so any specific set of inventory plan to be opened for this quarter in terms of should one look at that? Yeah.
So Dahlias has been open always. I don't think we've restricted any inventory or any tower. So we've been getting a phenomenal response, and I'd be happy to, at any given point in time, show you the graph there. And so Dahlias is doing very well. Most of that is.
Sir,
Sorry,
you're on
Akash, you
mute
have to
mode.
unmute.
Akash,
Yeah,
muted
yeah. I just realized that. So Dahlias, there is basically, as far as sales is concerned, it is open, because also please understand that these are high value transactions. So it'll be unfair for people. Yes, the price difference between certain values, depending on the preferential location charges that they carry, obviously are different from what they will be to maybe lower apartments or lower placed apartments or certain other things. So that's like any other kind of development that we do. But Dahlias has got some amazing view vistas with the new lake park that we're building, which is one of the most phenomenal green spaces that you will see. It's a hybrid of Hyde Park and Central Park, so it's going to be one of its kind, and that carries its own price point. And then, of course, the south side carries its own. So it's open, it's by invitation, and all I can say at this point of time, we've got healthy traction. We're doing well, and now we've got great traction from rest of India. In fact, from top equity and capital market brokers also have started to realize that, look, with all the geopolitical issues going on, converting financial assets to hard assets is prudence today. So I think Dahlias is doing pretty well there. It's got and also the NRIs continue to respond. We just clocked in super luxury one of the most renowned NRIs. I won't name him at this point in time, but one of the most respected, and I think in the top 3 NRI persons in the world, has just bought DLF super luxury. So we continue to get good traction from across the world. Rest of India is responding extremely well, and of course our local markets as well.
Sure. And how should we think about the monetization? Obviously we don't want you to rush on that, but in general, like initially when we launched, we had a target of, we have internal targets of probably monetizing it in 3 years. That still holds, or longer or shorter? What would be the timeline?
No, so Dahlias, as I said, is a first of all, let me tell you, it's a dynamic pricing policy. As you know, the valuations, the turnover is about 42,000 crores. And when we started off, it was about 29,000. So you've seen it grow. And as far as the monetizing is concerned, we had started with a 4-year plan. And because we've done well, what we had planned to do, we've almost doubled that target in just about 1 year. So I think we're not going to stop anything, but based on what the price points are going to be, I feel that it'll take its own time, and that's how super luxury should.
Sure. And just to reconfirm, Arbor to the senior living will get launched in Q4.
Yes,
along with the Dahlias next set of inventory.
Yeah. So we're working towards that. We're right now in various stages of permissions and all. So yeah, we're working towards that.
And what's the revenue potential, GDP potential for that?
That is about close to now it will be close to about 2,000 odd.
Okay, fair enough. And just on the commercial side, Sriram sir, what the exit run rate look like now with these leasing that has happened in the quarter, maybe for FY26-27, if you can.
Yeah, so exit run rates are now getting more and more difficult to forecast, because exit run rate, which we say have in March, we multiply it by 12, and then the escalations that come up there, and then the new build out which keeps getting leased and the operations commence and the rental start, it gets a little difficult to sort of only talk of the exit run rate. So as we stand today, our FY26 will be about the earnings for FY26 will be in DCCDL about 5,900 crores. And for DLF will be another about 550 odd crores. So we, in that sense, 26 for the year, it will be about 6,400 crores for the rental business, for the annuity business. Next year, this 6,400 crores will go to about 7,400 to 7,500 crores. In this, DCCDL will be about 6,300. But DLF will take a big leap of about 1,150 crores, because Atrium Place rentals will start coming in for the first 3 towers, and the rentals for the 3 malls will kick in also.
Sure. So these are actual numbers that we project rather than the exit run rates.
Yeah? Forecasted numbers.
So run rate, I mean the rental income forecast for the next fiscal. Yeah.
Sure. That's pretty helpful. Okay, that's it from my side, and all the best. Thank you.
Thank you. Ladies and gentlemen, before we take the next question, we'd like to remind you to ask a question. Participants connected on an audio call may please press star and 1. And participants connected on webcast may click on the Ask a Question tab available on their screen. We'll take an audio question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi, and great to see the cash collections happening in the quarter. So just one question on the cash balance and its utilization that we have. So are we looking for a bigger jump in dividend payouts this year?
So Abhinav, as we have told in the past also, that while obviously this cash number looks brilliant on paper, and it is, a large chunk of it unfortunately still is trapped in RERA. And frankly, we will start getting the unlocking of the RERA cycle from fiscal 27-28 onwards. So which is where I think meaningful cash utilization questions will come. On the dividend front, our dividend has been, so 2 metrics have been growing in the last 3 years, if you see. The dividend that we receive from Cybercity to DLF, and the dividend that DLF distributes to its shareholders. So we are hopeful that the same trajectory of growth on both of those metrics will continue.
Okay, and so for DCCDL dividends, should we see it as a 75% of PAT ratio to continue, or because I guess the biggest chunk is actually given out in the fourth quarter. So what's the thought there?
So the dividend payout, whatever percentage of the PAT was there last year, we at least propose to the board to continue at that level for FY26 and FY27. So, and that is in the ballpark of 75-80%.
Okay, that's helpful. So on the Kolkata IT SEZ, when is the completion expected?
Yes, so Kolkata SEZ, which is, if you may please recall, Kolkata, one asset which was in the books of DCCDL was sold, and the deal closed in December of 25. Kolkata SEZ, which is in the books of DLF, we have got the first stage approval from the Board of Approvals. We are awaiting the state approvals on 1 or 2 issues, which we are working along with the buyers. And we are quite hopeful that we will be able to close it in the current quarter. Yeah.
Okay, so the recognition should happen in the fourth quarter
Yes.
itself
Yeah.
entirely.
But having said that, the deal was such that the rentals per month continue to accrue to us till the date of the final payment. So in addition to the advance we received, the rentals continue to accrue to us till the date of sale.
Okay. Sir, one last question on the broader Gurgaon market. Now, I know, DLF branded products have continued to do very well. But we keep on hearing two-way news flows. Just wanted to hear your take on that.
On what? Residential, retail, commercial?
Residential.
Look, एक तो क्या है, I'll tell you, Abhinav, which is, and I hand this over to Akash, obviously, but then I'm saying it with semi-seriousness, semi-light, that, all the Mumbai-based analysts anyway view Gurgaon market with some degree of skepticism. So एक तो वो problem है. So even the slightest line hidden in somebody's stock exchange release, gets flared up and then is projected to cover the entire market, which is not the case. But Akash, obviously, you have a far closer connect with the market. So your view on the Gurgaon market, sir?
No, so Gurgaon market right now, I think this was a question also raised about maybe 2 quarters back. Gurgaon market right now has shown its robustness over years. And also, see, basically, please, there will always be all kinds of people operating everywhere, whether it's Mumbai or Gurgaon. But if you see the kind of traction Gurgaon is getting, and as I said, as far as DLF is concerned, I'm getting business for the Gurgaon markets from the rest of India. I have a very healthy pipeline, and we've converted. So just to put it in perspective for all of you, our sales are about 25% NRI, our top line, and 15% are the rest of India sales coming in for Gurgaon alone. Now, that is the kind of business that we are getting as far as Gurgaon is concerned. It is extremely, extremely well accepted. And people are, and across price points also, whether it's super luxury, premium, floors, plots, I mean, you name it. And Gurgaon is right now the most favorite investment option for people across the board. So there is enough depth in the market. People are choosing this by choice. Also a good reflection to all of this year after year, month after month, quarter after quarter is the collections that we report. So if there was any strain in anything that we would talk about, it will obviously, you will see a disconnect between sales and collection. So the markets are strong. People are putting their money where their mouth is. And I think the growth potential is tremendous. You see all the biggies coming to Gurgaon now. You name it and they're in Gurgaon. So why would they come into Gurgaon if there was any lack of depth or, if they had assessed it differently? But you look at all the top guys in the real estate market today, all of them are in Gurgaon now.
Yeah. Thanks, Akash sir, and all the best to the team.
Thank you.
Thank you. Thank you.
Thank you. We'll take our next question from Murtuza Arsiwala from Kotak. Please go ahead.
Yeah. Hi, sir. Just, in terms of, I think, part of the question you've already answered. You had a lot of commentary from peer set about Gurgaon being sort of slow, etc., but you've kind of answered that already. So that's well taken. If you could give some color on, let's say, what FY27 looks like. We're almost towards the end of FY26 in terms of the building blocks to sales, just beyond, Arbor 2 and Dahlias, that could be useful.
So Murtuza, as I mentioned earlier, that, from now till March 27, basically apart from Arbor 2, which the senior living, which Akash mentioned, we have one major group housing scheme in DLF City. We have the next phase of West Park. We have the next phase of Panchkula. We'll possibly have one more phase of DLF City floors. We'll hopefully have Goa. So all of these are in the approval and launch queue, in that sense. And Dahlias will continue to be the strong underpinning for this entire piece. So, fiscal 27 honestly looks pretty strong right now.
Thank you so much, sir.
नंबर में आपको गाइडेंस का में देंगे.
We'll wait another quarter.
Thank you. We'll take our next question from Jatin Kalra from Bank of America. Please go ahead. Jatin, can you please unmute your line? Since there is no response, we'll move on to the next. I request Parvez Kazi from Nuvama to please accept the prompt on his screen.
Hi, good afternoon, sir. So one question from my side. For the next year, you gave the launch pipeline. If you leave apart Goa and take the other 4 projects, which is Mumbai Phase 2, Arbor Phase 2, Panchkula, and maybe the one group housing scheme in DLF City, what will be the total sales potential of these 4 projects?
So, honestly, I think while we have the numbers, frankly, typically for the go forward fiscal, we have traditionally, done that. Slightly more transparent disclosures when we do the annual call, and I'd like to stick to that. But broadly speaking, the DLF City group housing should be in the range of a couple of million square feet plus, to hopefully 2.5 with all the TDRs and all coming in. The West Park should be about 1 million square feet, and the senior living is there, 500,000. Goa we know, Panchkula will be in phases. So I think there will be, and of course Dahlias will continue to be ongoing selling.
Sure, sir. Thanks and all the best.
Thank you.
Thank you. We have a question from Jatin Kalra from Bank of America. Jatin, can you please unmute your audio and go ahead with your question, please?
Hi, sorry, I think there was an issue earlier. My question has been answered. Thank you. Thank you so much.
Okay, thank you. We'll take our next question from the line of Akash Gupta from Nomura. Please go ahead.
Hi, am I audible?
Yes, Akash, you are.
Yes, Akash, you are.
Oh, perfect. So, first on the 4Q FY26 and the FY26 guidance, my question is that I think we have just one project, which is the Arbor Senior Living. So that would be roughly 20 billion GDV, and we have done roughly 160 billion. So should we expect Dahlia sales only to the extent to meet our guidance? Is that how should we think about the 4th quarter?
So look, nice try, Akash, but we stick to the fact that we continue to be confident. Look, there was a time at the end of September quarter when we had done 15,000 odd crores of sales, when your brethren were saying that now revise the guidance, and because we knew that you could occasionally get a rough over as well. So I think we stay confident or to meet our original guidance, in that sense. Whether frankly that guidance will lead us to 20,438 or 21,744 crores, I'm not getting into that. But we had given you a guidance range, and I think we broadly stay on grid for that. Akash, over to you, boss, if you want to add to that, sir.
Yeah. No, I'd love to give you any guidance you want me to. So no problem there. The only thing is that yes, we've given something. We're not planning to just fit that bill, but I think one thing good about our setup is that there are 2 things we're very conscious about. One, we're extremely cautious about compliance, and we like to make sure that everything is there before we make third-party commitments. And I think that is one thing that takes a lot of courage for a company to do. And second, as we've already been highlighting, there's a severe construction resource crunch and other issues that are going on. So there's no point just going into a situation where you just for the number's sake and for doing things, you continue to just be on that treadmill and make commitments and then struggle to meet them in the construction. So I think that's also something that as a company we've taken a call that we want to make sure that our construction processes get stronger and better. So I don't see any harm in that. I think both these display a tremendous amount of strength. We have also demonstrated our sales prowess, and so I think you all need to now please look at it from that perspective. When we're asked to do what we're asked to do, we will. So I don't see numbers a problem, because as I say to you, I said it earlier also, the world is the market for me. And today a DLF brand painstakingly, for over years, customers have been with us and stay with us. I mean, everybody gets very excited anything new comes in, and I relate to that. But I think this is where we are. It's a very strong brand today, great pull. So I think one step at a time, ladies and gentlemen. So I think that's what Mr. Tyagi also mentioned, and I'd like to say that also. I'd like to second that.
Understood, sir. And so my next question is on Privana and the IREO land parcel. I didn't see that, I think, in the FY27 lineup. Is that stacked up for FY28 now?
So देखिए ऐसा है कि I mean on the IREO land parcel, as I think I mentioned last time also, that we are now getting in hopefully the final leg of the entire approvals, etc. And I think at some stage, it will now come up for launch. I mean, it's a huge land parcel, as we know, with potential GDV of 8 million or 7.5 million square feet plus, which frankly could be in the range of 27,000-28,000 crore rupees. So I think that's something that will have to be handled with extreme degree of planning. So we'll clearly get the other products that I spoke about, out of the way before that. But I mean, of course, I mean that will come up for development and launch hopefully in the not too distant future. Yeah.
Got it. And Privana, that's FY28.
Privana, the last, the next phase. Akash, we have some visibility.
No, so Privana, we may bring in Privana in Q3, Q4, but again, as I think we're concentrating on first finishing off the 3 the successful sold outs that we've done, and collections are in line with all that. Construction is going on full swing. Next time when you guys are here in May, obviously the whole thing is planned to show you there as well. So I think the next phase will be sometime in later part of Q3 or Q4. But we keep that's the final call that we take is post this quarter when we kind of make our annual guidance. That's when we will run it by you. But see, we are okay with as Mr. Tyagi had mentioned to you, there will be one DLF Gurgaon launch. And it can be either, it can be both. So we'll see. Just give us this. Let's finish this quarter. I think we'll make those announcements.
Understood, sir. And so my one final question is on the medium-term launch pipeline, which is roughly 600 billion, and along with the inventory we have, which is 200 billion. How much time do you think should we expect this entire inventory and launch pipeline to be consummated?
Which
3 to 4 years.
So if we assume 4 years, that's roughly 20,000 crores annually. Is that how we should think about it?
Yeah, बिल्कुल ठीक कह रहे हैं. So at 20,000 crores, I think we achieve all our financial and stakeholder goals. Good year, it will hopefully be a number higher than that. In a one-off, problematic year, it could be 18, 19 also. But broadly, and again, the good thing is that us 80,000 के बाद, the next 40,000 is identified clearly. if the markets continue to be buoyant and if our execution continues to be strong, it's not that we have to then desperately go around scouting land. वो ज़मीनें भी हैं, licenses भी हैं, frankly. So it's in the drawing board. So in like 6 months, those things can be on the market.
Akash, this is one thing which we have reiterated several times, that we have an identified set of pipeline which we have talked about the near future, and we continuously work on these identified projects. We are not dependent on anybody else except for our own assessment of how the market is and our ability to deliver. Our ability to move forward any project out of these and incrementally add more projects, because land is already available with us, is at our own will and flexibility. So the timing of this could be a quarter here or there, but in terms of our ability to say where all and what all projects are going to come in has always been there.
Absolutely.
Perfect, sir. Thank you so much for detailed explanation. That's all the question I have.
Thank you.
Thank you. We'll take our next question from Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi. Good evening. Thanks for taking my question. Just a follow-up on the previous question. Like, I understand you have a identified pipeline, for the next, for the next, mid to long term. But just, looking at your cash flows and your 11,000 crores of cash plus the 43,000 crores that you'll make from your existing projects. You have alluded towards in the past that you may look at certain markets like Noida, right? Any update on Noida firstly, and then any opportunity outside of Gurgaon that you're looking at, where your pipeline is, but outside of Gurgaon, are you looking at any other opportunities or any other markets?
So as we mentioned, and I have mentioned in the past, you're right, that I think clearly Noida continues to be one area of interest. We haven't, frankly, we have one land parcel which is under litigation, as everybody knows. But beyond that, we haven't come across something, which is completely clean, take-worthy, and available. But clearly, Noida continues to be one segment, and Mumbai continues to be the second segment. But again, Mumbai, we believe that the West Park parcel that we have, hopefully, if we keep on, working and expanding the circle of West Park, this could potentially be a very long-term and a very deep land parcel for us, in that sense. But again, if there's something else which is of interest, and which comes up, clearly that will be a second thing. And then, of course, what we do with the balance of the money, I think is an important point. Shareholder returns will be an important thing. But also, as the money comes out of RERA, frankly, land replenishment and, how best to deploy it into assets with higher yield and all will be issues that, that will work in the next year or so.
Sure. But no new market besides Noida and Mumbai that you're looking at least in the midterm.
No. Delhi, of course, continues to be there, but beyond that, like.
Okay, so just to follow up on that again, like on Delhi, right? Any clarity on the second phase of Moti Nagar?
So what the issue that I'll tell you honestly is that Moti Nagar, we are working, or we are sort of working with the government to see, and basically to ensure that the infrastructure around Moti Nagar can actually get enhanced to truly make it like a far more upscale neighborhood. Moti Nagar is central Delhi. So we clearly, and I think that is a process which will take some time. But I think we would ideally like to hold on to the next phases of Moti Nagar launch till such time that the infrastructural works being planned by the government, there's a visibility on that and there's a certain execution that has happened. But clearly at some stage you are right that the next phase of the Moti Nagar piece will happen. There's a 7 million plus square feet that is available there. The Moti Nagar mall is getting commissioned this year. Midtown Plaza is getting commissioned in the next quarter. And so we continue from our standpoint to do everything to make the experience of the residents there, there. Already now we have in excess of 8 million square feet between Capital Greens and One Midtown residents who are, I think we have almost 3,500 residents who are already staying there. So improving their quality of, of living, and just trying to work with the authorities to see how we can improve the infrastructure, including the massive green around that area.
Great. And one last question. You did give clarity on the health of the NCR market in our previous question, but just to follow up on that in terms of I understand DLF is doing really well. You're getting response for your projects, but how is the industry or your peers doing? One of your peers earlier in the month kind of alluded towards some kind of a slowdown. Some of the other peers out of Bangalore also alluded towards a cautious outlook on the NCR market. I mean, just your thoughts on the overall market, not just your products.
But in all fairness, we don't comment on individual peers. But to just borrow from what Akash mentioned earlier, a lot of the major real estate players are coming to Gurgaon. Some of them have announced very marquee launches in the next calendar. So clearly, I think Gurgaon, I mean, again, NCR as overall is 3 different markets, but Gurgaon specifically, continues to be a market which does attract attention and holds attraction for even other players who are not present in Gurgaon so far. So I think there is an underlying thing. Yes, obviously there will be one-off people who may have had some headwinds, in that sense. But I mean, we do believe that the underlying strength of the market for credible names continues to be there.
Thank you. Very helpful, and all the best.
Thank you.
Thank you. Our next question is from Gaurav Khandelwal from JP Morgan. Gaurav, please unmute yourself and go ahead with your question, please.
Yeah, hi, good evening. Thanks for letting me ask my questions. My first question is just to understand the company ethos a bit better. I'm just wondering, what will it take, or is there any intention or no intention to, let's say, scale up your deliveries closer to the other big listed players, right? So we're talking about 15, 18, 20 MSF of deliveries every year. So what exactly is your thinking on these lines where we are, and is there any possibility of this scale changing in the next 3 to 5 years?
So I'll tell you, Gaurav, actually million square feet is about the most irrelevant metric, frankly, in this industry. You have to focus on the sale value we are generating. You have to focus, not only anybody, you have to focus on the margin that is being generated. You have to focus on the free cash flow that is being generated. And frankly, I truly, I'd say appreciate if that, over time, if the entire community who's studying this industry moves, I can launch, I'll tell you frankly, I can launch at 10 million square feet somewhere in, on the outskirts of Haryana or UP or Ghaziabad. That will add volume, that will add execution headache. Will it add cash flow? Will it add margin? And I think that's the question that at least we have asked ourselves. And frankly, yes, we have a sharper or a higher threshold of margins that meet our products. And I think, we clearly products that don't meet those margins, I mean, we ourselves have some land parcels which we have not developed so far, because we believe that there is a eventual margin that those products will realize, which is not available today. So we are definitely, Gaurav, from an ethos standpoint, not going to chase volume for the sake of volume, boss. We were the original pioneers of the volume journey, and we have seen the downside of that better than anybody else,
Right, that's super helpful, sir. But just as a follow-up to this, in your current business, then is supply availability of contractors, the grade A contractors, is that a hurdle or not really?
It's not a hurdle, but it's clearly a constraint, and you have to work on that. So we do keep on expanding the pipeline of contractors. I mean, in the last 12 months, correct me, Puneet, I think we have added 3 or 4 new contractors with whom we had not worked in the past. A couple of old contractors have returned. So I think clearly going into the contracting piece, we have ourselves strengthened our technical backbone humongously in the last 24 months. In that sense, the number of senior technical people that we have taken, because now we clearly realize that we are going to do a lot of that, to ensure better supervision. For Dahlias, we have lined up Samsung to do the project management. So I think we are clearly looking at all possible, tools to ensure that whatever we undertake, we execute and execute it well, boss.
Got it. That's very helpful. And just I have one one other housekeeping question.
May I just add, you talked of this million square feet. I think what's probably lost is that today in the rental business, we have projects in pipeline totaling to about 12 million. So if you add that and you add the residential side of 60,
over 40 million square feet is under construction at this particular point.
So 40 million is under construction. So I do not know if there are any developers who are doing 40 million a year.
They may be, to be fair, but I think we feel that this 40 to 45 is what we believe we can, at today, this is what we can execute well. And hopefully, I mean, this number was a lower number 3 years back. And hopefully, as the competence keeps on strengthening, I'm sure this number can go up in a calibrated manner. But 40 to 45 million is frankly what we used to be at the peak in 2010-11, 50. So I think we are where we feel we are now being, we are being constructively stretched, but I think we are still able to keep. What also happens is that we have we have an enormous architecture of the compliance framework, below us. I mean, the total number of individual compliance items that get vetted and checked and audited every quarter is, I won't give you the exact number, but it's a 5-figure number. So, I mean, it's just it's an elaborate engine that works, unfortunately.
Well, no, that's phenomenal, and thanks for that, Kala. And yeah, commercial, of course, I completely agree. You are the largest operator in the country. And just my final question, which is more of a housekeeping question. On slide 28 on your cash flows, there's a inflow of 131 crores on account of government approval and others. Can you just better understand what is this number?
Yeah, Gaurav, there is an investment which was made in one of the subsidiaries which was returned back this month of close to 250 odd crores, and that is included in that line, and hence it's shown as a recovery rather than expense.
Actually, it's 120 crores of government outflow, and 250 crores was the refund that we got. So I mean, we had given an ICD to our Mumbai project, and hopefully because of the boisterous collections, that money was returned back by the JVCO to us. So that 250 crores came back.
Got it. Perfect. Thank you. Those were all my questions.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the call to Mr. Ashok Tyagi for closing comments. Over to you, sir.
Thank you. Thank you so much, because this was an extremely insightful conversation. Yes, I'll address the elephant, straight, that as Badal also mentioned and Akash mentioned, this quarter did, visually have a very low pre-sales number. So I understand that, but we explained the reason for that, which was basically the fact that we consciously and regulatorily, held back the Dahlia sales, and that anomaly has been fixed now, and hopefully it's back in the pipeline now. Our launch pipeline continues to be exactly as we had mentioned and articulated in the past. And while obviously, Akash and his team have to work and have worked tremendously hard in the last 3 or 4 years, I think that will continue as we bring more and more of these products into the market. The construction back engine, has been strengthened over the last few years and continues to be so. But obviously, when we are not looking just at a launch, we are looking at our 100% certainty that we'll be able to bring that launch to the consumer's hands in the time period that we have mentioned. Financially, of course, we have now a 5-digit surplus cash with us. It is still with RERA, but hopefully from fiscal 27 onward, we should begin seeing a very systemic unlocking of that. And I think that's where, things should start really strong. And the commercial engine just keeps on, outperforming quarter on quarter, year on year. And hopefully in the next, 12 to 18 months with the downtown Chennai, Atrium Place, the 3 malls, and then the next phase of downtown beginning to commission, downtown Gurgaon. This engine will just keep on growing, and really hopefully, so we continue to be in a safe and a sweet spot, and just that's it. Thank you.
Thank you, members of the management team. On behalf of DLF Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting.
Bye.